Good afternoon, everybody. How's everyone doing? Should be live on YouTube, should be live on the virtual trading floor. What's going on, Eddie Webb? What's up, Ben P? We got Bandit in the house. Christian, Tate, Bill. Let's jump in. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of recipient. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There's the position disclosure. So I got out of CCL and DAL shorts into the close. To kind of concentrate myself a little bit in this teachable Q as the market becomes less extended. But still keeping that on. Really, like I was saying, into the close, based on the way I typically trade this and the strategy I typically have on, I should have fully exited T Triple Q today, which I did do, but I got back in. And that's the difference. I normally would not get back in here, but I decided to get back in. We can talk about that a little bit. I also did get back in a few of these long positions. None of them have real size at this point. Just Rivian maybe a little bit, but I got back in KRE, Plug, Lemonade, made a few bucks, I think, in those names today. Made a few bucks in Rivian today, which was a focus, a new trade focus for today. So let's talk about it. Let's go to the charts. Let's go to the charts. All right. S&P here closed down 0.6%. The Q's closed down about 0.4%, and the Russell closed down about 0.6%. So once again, a little bit of relative strength in the Nasdaq, not major, but a little bit. Um, you can see here on the intraday chart. I guess let's start with the SPYs. The only weakness that the market had. So we gap down across the board. Whenever I'm having gaps, especially if those gaps are a little bit larger, which this one kind of was to the downside, I always really want to take a hard technical look at my 5-minute chart for what the market looks like the first time the ADMA is catching up to price, or price is catching up to the ADMA. Because this was kind of a layup part that got called out here at 950. We were kind of testing this intraday resistance at 438. The ADMA was just catching up there. And I said at that time, if we're going to have a move lower, it should happen now, right? We had an initial price and time correction here for that 10 minutes of price correction. Then we went sideways. The Qs at that time were acting relatively strong. You can see, unlike the S&P, which went up a little bit and then went sideways, so that's kind of bearish. The Qs actually basically created a full gap fill into small time frame equilibrium before creating a pivot high that then led to the breakdown. And the IWM initially at the open had relative weakness, and that relative weakness in the Russell actually gave way to some relative strength when the Qs and SPYs rolled over. The IWM did hold in a little bit better. So initial relative strength here from the Qs. But you can see here starting at 950 is when they really broke lower. And if you go to the IWM, at 950 you had a downtick, but you didn't get like a quick break of lows or anything. The Qs were kind of rapidly selling off. SPYs were making new lows at the 10 a.m. candle. And the IWM, I guess, did tip new lows at the 10 a.m. candle as well, but there was no real major breakdown. So you had a bit of a flip to some strength in the IWM that was giving me hope. But then you got this 5-minute shooting star into the 21 EMA on the 5 or the 80 EMA on the 15 that caused this thing to break down as well. But even when the IWM broke down and it did tip below 184, 184 is a key level that I mentioned in the morning meeting. We ticked below 184, but we never really lost support. There's big support on the daily chart for the Russell between 184 and 185, and the Qs were breaking down, the SPYs were kind of breaking down. They were, deepening their price and time corrections on the daily chart. The IWM, ideally, you want to see stronger. Like I also said in the morning meeting, the best case scenario, and I'm not saying this is going to happen, but the best case scenario right now for bulls would be a bit of an upside pain trade in the IWM, or at least strengthen the IWM, while the Qs and SPYs continue to correct. And we've seen that actually over the course of the last several weeks when we've needed it. The question is, will we see it again now or not? So you had the spies break down as soon as that ADMA on the 5 minute put up. You had the Qs create this pivot into equilibrium that led to new lows, and you had the IWM actually throwing a little bit of strength here. From that point, though, once our new lows came in, the rest of the day was somewhat boring. Between the pivot low, which is the low of the day at about 10:30 and noonish, there was nothing going on. And then we started to break up a little bit just after noon, and that bounce back was a good bit stronger than I expected that it was going to be. Kind of was thrown out there, maybe this is just some of that. We've just seen the afternoon rallies happen so often since zero DTE became such a big thing, and we've read some data on kind of why that's been happening, especially back when we were stuck in the big picture range for the market. We were seeing very low close to close volatility, but relatively high intraday volatility, especially in an environment where you consider that the closes were, not giving really big moves from close to close. There's a lot of intraday volatility. You would see sell-offs happening in the beginning of the day, midday reversals, strength coming back into the market, and that's closing decently strong. And it's going to happen today. So if you go over to our daily charts, you can see we clipped the ADMA for the spies and I think the Qs for the first time in a little while. So we got a good technical price correction here over the course of the last couple of days. I think it was Thursday's afternoon meeting. I titled it something like things are getting silly, just because the markets were going completely parabolic. So, a day and a half of price correction here to get the S&P back to the ADMA is exactly what you want to see. The question is what happens next. I could give you three possibilities of the next days, but let's really dive into that a little bit. So for up, well, the case that you make up is that we are in a very bullish market. The technicals are very bullish. A borderline momentum-based market. Every time we get a little ahead of ourselves, we first take the higher low and then make the higher high. That's your Super Bowl case. Here we go. Anybody else having audio issues or just Steve? Okay. I was doing the muffle thing again. Was it muffled when I first came on? Because I know in the past we were having that issue, usually in the morning meeting, where I'm muffled for like 3 minutes. And then I think it seems like it's just good from that point on, which is why in the morning meetings I've been turning it on early, just in case. And that's only when I'm on this, you know, really expensive brand new computer that I bought. So it's kind of frustrating for me. But we'll see what happens. Anyway, if I'm sounding good, I'll just continue. I wonder how the sound quality was there on YouTube, if that also dropped. I would assume so. But just pushing on. So no, I'm always kind of talking in the same direction. It's weird. Um, anyway, so up, down, or sideways, right? That's pretty much always the case. But let's kind of dissect that a little bit. So, like I said, on the upside, it's just higher highs and higher lows. We're in a bull market, so we get the pivot low that comes in right here, and then that leads to new highs. Pretty simple. The bear case is a pretty low probability situation right now. If you're trying to have a real bear case on this market, if you're trying to say, "Hey, Mike Wilson's going to be right," the technicals are just completely against you. You're betting on a full reversal, and betting on full reversals, we know, is never really a good idea. It's one thing to look for an extension retracement. The market gets extended like it did a couple of days ago. We put our thoughts on and we have a calculated area to look for a retracement to equilibrium. We've done that successfully like 3 or 4 times just since the market broke out less than a month ago, which is really impressive and a really good job that in this market we've been able to obviously make money to the long side, but also make money to the short side. And we just did that again over the course of the last couple of trading sessions. So if you're betting on the full on reversal, everything's against you, the technicals are against you, you just have to have, I don't know, conviction in the thesis or something and 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 deep pockets. Very, very hard trade. And I never want to bet on reversals as a real rule. So I would say that is the least likely situation. And the other situation is that we just go sideways. We time and price correct for longer than we have since the market first broke out through SPX 4200. And that's kind of the case that I'm leaning towards right now. So if I had to, put them in order of probability, I would say probability number one is that we get some deeper price and time correction compared to what we've seen at any other point since we've broken out. Probability number two is just momentum trend continuation. I don't think that that's too much lower of a probability than my situation number one. And then the lowest probability is just, full reversal happens to happen in the market. So and it's the same reasons that we've kind of been pointing out for a couple of weeks, just the spread between the 8 and 21 EMA, how ahead of itself it seems like some of these stocks have gotten and the market itself has gotten. Information that's come from the VIX. I think, and I assume Pat's still here, we've seen a little bit of a VIX divergence again today is what the information was looking like that it was reading in the VTF, where VVIX was kind of moving higher and the VIX was moving lower. So we've seen that precede other predictions as well. So there's a lot of evidence out there. There's a lot of pieces of information that's out there that could lead to just a little bit of a deeper correction through price or through time. With this 21 EMA, which we seem to have almost forgotten about, notch up a little bit, or let the price action, move down to it a little bit. That's why my game plan coming into today came into today with shorts on, pretty heavy to the short side actually compared to the long side, compared to how I typically am. I came in with my shorts on, but I also wanted to begin to piece back in the longs, while I keep in mind that we can have a much deeper, healthier pullback. And where do I want to be getting heaviest? I want to be seeing an SPY 432 as an awesome spot to start to build in with a little bit more size. At the same time, if that scenario two of momentum trend continuation just plays out, I don't want to put myself in the position to entirely miss that either. Yet I don't want to be bag holding if I'm buying 437 and we're moving down to 432, and that's the area that I want to load in. So for me, it was kind of just piecing out of the shorts as we got to the ADMA on the daily chart for the spies and Qs, which was really all I was looking for with my T triple Q short position. Was just we got to that area that we've gotten to three times now since we've broken out, where the Qs were trading at 373. ADMA was at 362. So basically had like $11 of upside extension in the QQQ, Thursday into Friday morning. So that's when I'm looking to short, get the move into the ADMA. That's really when I'm kind of looking to get out. But this is if the momentum trend is going to continue, today's low is really where the pivot should happen. But I'm looking for fun. Let me get out of some of my shorts. And at one point, I got into Q entirely on the short side, basically as an approach that ADMA on the daily, which is my target. And let me build into longs a little bit. Let me nibble back in a little of that plug, lemonade, KRE. I bought back some SoFi, pre-market this morning, building back into some S's and purchase of $15, and build back slowly into these names, but still leave room where if the spies want to give that deeper correction to 432, which should be a healthy correction and a deeper pivot low. If you really want to pull back to 357.50 or so and test a previous resistance level that we just broke out from like a week ago, I can still have the ammo there to really build in and get a good bit heavier. So that's kind of my general thought process is as I try to balance the different scenarios that can happen with the market. And so far so good. So far so good. I got out of Delta short. I got out of CCL short, even though there is more room for those to go to the downside. They've just been incredibly strong. Made a few dollars, got out of the way. And then as far as the Qs go, what I've done previously when I've shorted this T triple Q, and I shorted on this day on the 30th, and I shorted on like the second into the fifth. And started a little bit, I think, on the second, and then I think got heavier on the fifth, and then got out on the seventh here. Um, what I've done in the past is every time I've gotten this pullback, I know this pullback wasn't even to the ADMA, but I was being kind of shallow with my target. And this pullback, I've been getting out 100% and then not getting back in until I see us get $10 extended again. So if I was going to do the same game plan, which is the game plan I've been doing, it's been successful. I would have gotten entirely out of the QQQ for today, which I did, but I wouldn't have re-entered. I would wait for us to become $10 plus extended again on the daily chart on these Qs, which for now would mean getting back to 373, 374, something like that. But instead, I decided to build back in a little faster and a little earlier, just in case the thought process of let's get this deeper price, deeper time correction actually comes in. I'll be glad I have that short on the books. So I can continue to work the position. But let me also recognize that we did really just get the extension pullback that I was looking for, and that it is a bull market. So I decided to get out of Delta, get out of CCL. I got rid of Tesla on Friday, which I'm really glad I did. Obviously, Tesla's just a complete and utter monster. But instead of getting out of these queues entirely, I'll piece back into some, kind of keep it on the books a little bit. If we, do have the upside momentum move from here, I'll be fine. I did really, really well with it. I'll just give back some profit on the short, which for me is worth it right now for the reward potential of the deeper time price correction. And again, I do still have these longs on, so it hedges me out a little bit further if we have that deeper time price correction. And if I'm wrong and the market does move higher, which easily could happen, and we get a new high that comes in, I give back some profit on the QQQ short that I just made, but I did build back into, even though I didn't do it in a heavy way, into some of these longs on today's trading session, pre-market at lows today, and I still have those positions on as well that they can pay me on the upside. So again, that's just kind of the broad thought process, broad game plan right now. As far as individual stocks go, um, I do take that US steel trade, but it worked out pretty well if anybody bought it off the open versus 23. I do like this thing for continuation. CLF was similar if anybody was able to get some off the open. Rivian became a focus for me. I thought that Rivian news was really important this morning. The market didn't really seem to agree. We didn't have like a massive squeeze day or breakout day in Rivian. I kind of laid the case out a little bit in the morning meeting. So the news is basically Rivian is going to be able to participate in Tesla's infrastructure for the charging pumps or whatever they're calling it. Which for me, just understanding what Rivian's kind of dream business model was, and I remember even looking at this at the IPO, they had this map built out of Rivian charging stations and how they would strategically place them everywhere through the United States and Canada. And it was going to just be a multi-billion dollar project to be able to put that together for a company that's already just bleeding money and is going to lose billions of dollars just to try to get to profitability in like 2030. In so many ways, this company is ridiculous, but I do think they have a cool car. Um, if all of a sudden they can participate in the Tesla charging stations, I think that the news is huge for them. I mean, it's potentially billions of dollars of money that they don't have to spend, or maybe not spend in the same way, building out their own charging stations all around the country. So I thought that news in combination with maybe a break above like 15.50 to $16 to get this thing going. And it was an okay trade, but definitely didn't give the upside momentum that I was really looking for. Bought a little bit pre-market, bought some more off the open, was waiting for the first kind of pivot low to come in. I think I added some in the mid-teens, put in the pivot low at 1506. Once that happened, and the ADMA caught it, put in my stop at 1505. And then we had a great momentum move here, starting with the second bar. Like, oh wow, things are looking great up here at 1850. I think I sold some at around not 1850, 1580. I think I sold some around 1575 on the way up. Okay, fine. Has a little bit of a deeper price correction. I'm very happy with this fourth candle here, though. This continuation hammer into the ADMA on the name with news with okay relative volume. Actually, wish this volume was bigger, but it just didn't really go off that. You never like I know this wasn't the end of the world to get a little bit of a deeper pivot low and then attempt to get continuation. But if you're looking at like momentum names, how they trade, you don't really ever want this low to break. You want that pivot to come in, that continuation hammer to come in versus the ADMA. You want to instantly be making new highs off that, going after $16. And maybe you're very extended into 16 and has to, play around there, struggle with it a little bit, pull back a little bit, and then you break through 16, it's 1030, and then the next layer of momentum squeezing kind of comes in. The bull flow is hitting into the VTF, and you get that, maybe not as extreme as Carvana, but like Carvana-esque move like we've seen recently, where the stock can work up to 1675 to 1750 all intraday today. That's what you really want to see in this situation. If that happen, I'm a believer in the bad ticket take the ride. thing that I always preached to everyone else. I really thought this thing was fine when it was, trading around 1030. It never should have pulled back here. It never should have broken this low. It seemed inevitable to me that the opening low was going to break out and I was going to get stopped out. And then, buy the ticket, take the ride for the conspiracy theorists that, the stop hunters are always there. Well, they never took my stop at 1505. The low of this pullback was 1507. They didn't trigger it by 2 pennies. We somehow held in there. And then the thing kind of went into a little bit of an upside down and closed. Okay. I did not think I was going to be swinging this, but like I said, I think to Elliot when we were chatting a bit into the afternoon, I might keep some if it closes well, if it closes near highs, and I did. So I kept some in, closed well, closed near highs. It is technically an inside day, so tomorrow we'll see if we can get the inside up and see if we can actually clear 16. But I'm probably keeping it pretty tight on the downside, going forward. And glad to not get sneaked out there because it turned into being my second best name of the day. So not bad. That's pretty much all I got for you guys. I'm happy to take a look at any questions that anyone else has. So let me scroll up here into the VTF. Looking through here for questions. I'm not really seeing any. Seeing I think Eddie, Vic, and Steve chatting a bit about PayPal or FedEx. Yeah, FedEx bounced back a little bit. Initially, those numbers didn't look great. What was it? Fourth quarter revenue was a miss. Adjusted EPS guidance for 2024 looks light. The range looks light. Um, CapEx is below estimates. FedEx CFO to retire. From Cameron, any thoughts on JD and Bob? I was looking long today, but left them alone since they were weak all day. Did you see any short signal? I've been swinging long JD, and I traded long Baba today during the day. Kind of finished break even ish on Alibaba. Um, yeah, I don't know. So the Chinese names back down really big this morning. But Alibaba had some relative strength off the kind of the Jack Ma news, and Baidu had a lot of relative strength off of an upgrade that it had. So at the end of the day here, JD closed down 6.75%, almost 7%. Pinduoduo closed down over 7%. Alibaba 4.5%. So you still have some relative strength there, and Baidu closed down 1%, so still some relative strength. But they gapped all the Chinese names down this morning. I think the Asian markets were weak overseas. Just I guess what that was stemming from. I didn't really see anything to do in JD. I was disappointed in the price action because I've been swinging long. My target in this thing has just been like 41.50, $42, and almost got there on Friday afternoon. But then, yeah, pretty big gap down this morning. So for me, I added back some stock in JD that I've had sold at higher prices in that 40 area, but I didn't do anything else. Bob was a little bit more of a focus for me because um, the relative strength that it had off of news this morning, plus the fact that it was gapping down into kind of a previous support zone. I mentioned the 89 to $90 area in the morning meeting. But this off the open, there was just kind of heavy downside momentum selling. So I didn't do anything with it in that 89 to $90 area. And it wasn't really until it got closer to like 88.50 that I put on my first trade on it, really into this extension. And I did okay with it. I didn't really get the upside price correction that I wanted. I like bought like a smaller, more core type position, and then closer to lows, closer around like 88 quarter, I got a lot heavier just for a bounce back. So I sold all the heavier stock that I was keeping tight, and I didn't really sell much. I barely sold any of that smaller kind of core position that I had. So I made some money in like the bigger trade on the size, and then I bled out a little bit on the smaller core, when this thing was just not looking right. There was a wedge here. I could see it didn't bounce as much as I wanted to, as much as I wanted it to, and then it kind of broke down further. And then I repeated that process actually. I added a bit to that core position, and then I got heavy again as a smaller, tighter trade in like this 87.50 area. I think I got some mid 40s, 87 mid 40s. Just looking for the snap back to the ADMA, which I got. So, at the end of the day, and then I actually keystroked out of it by accident. 'Cause I haven't done that in a long time. I pressed the wrong button and I liquidated my entire position just above 88 here. It wouldn't have made much of a difference if I got out there versus getting out at the close. But net, I ended up more or less break even on it because I had two trades with size that worked pretty well, but I kind of had this core position that I let bleed out against me a little bit that I lost some money on. So net, it was all break even for me. But I really prefer the long side of this trade. I like the Chinese names into weakness if I can get the right signal to get involved, just from a fundamental perspective and a technical perspective. It was just that I also know from definitely from recent previous trading experience that when the selling is coming in on this thing, it can be fast, heavy, furious, and I gotta be very selective in kind of how I fight it. I'm not gonna say I'm not gonna fight it because I will, because I think that the big picture's on my side. Again, just going back to this daily chart on BABA, you got some support in this 89 to $90 zone, and then you got another support area as you kind of approach like this $86 area with 21 EMA at 86.62. There's a lot of support in this entire area really between 85 and 90. Like a lot of different levels of support on the way down as you get into this equilibrium zone. So I want stock in this thing from the big picture to the long side. I don't, the way that I trade is if I see a bearish setup on a small time frame and a bullish setup on a big time frame, if I have to trade it, so first of all, that might mean I just don't want to trade it, right? If I see a bearish setup in a small time frame and I've got a bullish setup on a big time frame, I do not have what we call time frame continuity, right? Time frame continuity means everything looks bullish on every time frame. That's going to be a preference. But if I'm seeing a bearish pattern on the small time frame, a bullish pattern on the big time frame, which one is going to work more often? The big time frame is going to work more often. So I'm not. Someone asked me about it intraday also. You probably could have shorted this wedge here somehow and made money on it. That's not my trade. That's not what I'm looking for. I would much rather be long if I had to choose this bearish pattern than short um, the big picture bullish pattern. And with that said, I would not come in and buy at 9:55 or 10 a.m. today. I'm not going to buy a bearish 5-minute pattern. Where am I buying? I'm buying on this bar. I'm buying on the 940 bar. I'm buying on that third heavy selling 5-minute bar where the extension's starting to get crazy and you're looking at a stock trading at 88.14 on the 5-minute chart with a daily with the 5-minute ADMA that's still at $90.33. So we're talking about a $90 stock that is extended by like 2.5% or something like that to the downside away from the ADMA on the 5 in a bullish looking daily chart. That's where I want to come in and look for that snapback. And the flip side is, while I'm not going to buy here at 10 a.m., which is clearly a bearish pattern, what do we know about technical chart patterns? I've been saying this a lot recently because I only ever learned these statistics actually somewhat recently, is that technical chart patterns have like a 30 to 50% failure rate depending on the pattern that you're looking at. So the big key to success in them is knowing your other layers of probability. So, whereas I'm not going to buy this pattern here, it's clearly a bearish pattern. I don't mind buying this degree of extension and then still having some stock just in case this bearish pattern fails and actually breaks up. And then this thing actually begins to reverse on the small time frame, which coincides with the big time frame. And then, I was looking for a move to $90 basically intraday. And then I figured I would take it from there and see if I want to keep a core position, see if I want to keep a swing position, something like that. It never happened. The bearish pattern on the small time frame breakdown. Again, you could make money the short side on that. I don't personally like that trade. For me, it was just like, all right, let me watch and look for the next area of more extreme extension where I can actually look to buy again or some sort of pattern that can be fruitful for me. And that came in at 10:30. At 10:30, I got the stock traded at 87.35 with the ADMA at 88.20, right? So I've got um 80, 90 cents, let's just call it 1% of downside extension from the ADMA on the 5-minute chart in Alibaba at this point, but it's also 10:30. We're getting continued extension on a 5-minute chart at 10:30 with no new news is very hard. So I, came in and got to the long side there. And then that was it. I did not do any new aggressive buying into this pullback. I might have rebought very small some stock that I sold at like 88, 88 quarter, but not like I got the first time when there was that bigger extension there, just like a small rebuy. Probably sold some of that, and then again at the end of the day, I didn't have enough of a profit cushion to keep it, so I'm not going to keep it. I want to keep my swing positions from win-win position like I am with Rivian. Rivian, I wasn't thinking I was keeping it. I mean, it seems so well. I need so much money in it. I'm like, okay, I might as well keep some. But looking at Alibaba, again, a key straight down around 130. Otherwise, into the close, I'm basically flat P&L-wise in the name around $88. It just doesn't make sense to take on the overnight risk. So thanks for the question, Cameron. Hope it helps. I think next is from Tate. What is the initial sign to where you start adding back to core swing positions with these indices all still above the ADMA and the SPY and the Qs above the 5 SMA? Do you believe in the strength in your names where you aren't scared of, say, the Path 21 EMA daily tests? Um, or space between equilibrium on SoFi? Well, we had discussed last week, actually, I meant to bring this up in the morning meeting, that SoFi closer to 10, closer to 8 is a big enough of a pullback into that equilibrium zone that would be the area that I would really start looking to buy it. So pre-market this morning, I bought a bunch at like $8.20, which also turned out to be the low of the day today. And I sold some of that into the up move, but that's not your question. Um, a situation where you are mentally prepared to buy some support levels or lower prices than you could buy today, right? Uh, so I would continue to buy more of both of the names that you mentioned, SoFi and Path, if they continue to deteriorate. And that's all buying back stock. Like you got to realize, like I have been selling SoFi from $5 to $10.16 was my best sale in it. I took a really big sale at $10.16 also. I think 10.07 and 10.16. So for me, it's all buying back stock at this point. I can continue to do that and be fine as long as the math and numbers work out. But I guess to directly answer your question, like the when and how am I doing it? It depends a little bit on the stock that I'm trading. There's kind of two ways to do it. One way that you can do it is technically based. One way you can do it is systematically based. And I think we've talked a little bit about both of them. Doing it technically based is just like, okay, we got solely extended here at $10. So I'm selling some into this extension, and I will look to rebuy some into the 80 EMA, some in a place between the 8 and 21 EMA, some into 21 EMA, and that's going to be all buying back stock so that I can keep the cash flow difference. And because I don't know where the pivot, if I'm and assuming something does pivot back up, which it doesn't have to, but assuming it does, I can't tell you when this thing is on the day of its high and it's pulling back to 950, I can't tell you is the pivot low going to happen at $8.85 and barely even get to, or maybe not even get to exactly the 80 EMA and pivot above it? Is it going to pull back deeper to the space between the 8 and 21 EMA and give me that pivot? Is it going to pull back to the 21? Is it going to fail entirely? I can't tell you that. I have no idea. So, you got to be comfortable if you sold some at, $10, buying some back at 8.85 and having the stock of 7.85. You have to be comfortable with that. If you're not, then you have a bad game plan, right? This is all win-win stuff. It's just a matter of, where am I taking that stock back? The more patient I am, the more it pulls back, the better the P&L will be of the buyback. The more cash flow difference I can keep, the better the price I get on a buyback. But the lower the probability that I actually don't get stock and then pivot back over that me. there's gonna be a balance, right? A balance between I want to buy some at 885 in case there's a very high pivot there and then it snaps back, but I also want to save some room to be able to buy back more at 820, at 785 should we continue down those levels. So that's the technical way to do it. Again, it's just kind of off of a measure of extension. It's a lot of, in some ways, what I do in reverse or what I've been doing in reverse, so like that T triple Q. I'm only shorting it first on extension and then bring the short into equilibrium. I think SoFi's weakness here these last few days was particularly helped by three downgrades over the course of the last 4 days also. Um, the other way to do it is just systematically, and to do it that way, you got to have a much bigger core position. But like if you were saying to yourself, well, my game plan starting from $5 is that I'm going to sell, stock. I'll sell 100 shares every 10 cents on the way up. Well, you just sold, 100 shares from $5 to $10. It's 5,000 shares there, right? If you did it every 10 cents up from 5 to 10, and then you're going to rebuy it every 5 cents down. Sorry, every 10 cents down, right? So you sold every 10 cents up, you rebuy it every 10 cents down, you make all the differences in between. Um, and I do both of those things. I do both of those things depending on specific game plan for the specific stock that I actually have. So hope that helps with that. That whole key again is to do it from a win-win situation. Even like me getting back in plug, KRE, and lemonade today is all of the same thought process. I'm taking some of the money that I made by having trades in these things, and now that they're even though I'm out of them, let's just say that I made $1,000 in plug, and now I'm out of it because the thing went up too much. Well, guess what? It pulled back to the ADMA on the daily chart, which is going to be that upper band of equilibrium. I'll have that as my initial buying point, and then I will, systematically piece back in with the $1,000 of risk, the money that I made. Meaning that if I ever get to being, down $1,000 in this thing, as I restart buying it, I'll liquidate the position for break even. Yeah, it's annoying to give back $1,000, but $1,000 doesn't become $5,000 unless you're willing to risk some of it, right? Uh, so I can do that and do the exact same thing, except I'm kind of re-entering the position. I do a lot of that also. So that's what I did in plug today. That's what I did in KRE today. That's what I did in Snap, which I got into and then out of. It's what I did in JP Morgan, which I got into and then out of. Um, so hope that helps. From Rex, I was looking long Tesla at oh my gosh, this Tesla is absolutely insane and it's up more after hours. Sick. So we're looking long Tesla at 10:05. Okay. I mean, phenomenal relative strength compared to the Qs in this first half hour of the day. Uh, bit extended to the upside though as well. Inside five, relative strength, broke Wednesday's high. Also thought that Rivian news is more or less benefiting Tesla. That's an interesting thought process I didn't think of. Okay, so you bought it at 10:05. I assume you got shaken out of that into that deeper pullback. Um, you also tried it at 10:30 again. It's a harder trade in my opinion, even though it probably worked for you. Also tried at 10:30 again. Let me look at the 15 minute at that time. Right into the 15-minute 21. That's a tough trade. This for me, this is a deeper pullback than I want to see to buy. I know it's still held opening lows, but it's a deeper pullback than I would want to see to buy. Maybe the market wasn't helping or whatever. Um, we tried it at 10:30, held the opening low. I saw that quick uptick to 26.20 and back through to 262.20 and then back through 263. So I went long, and the market also tried to pivot. So you got the market on your side a little bit. Oh, you got shaken out of the low of the candle there. That stinks. When trading pivoted like this, it seems like I always get chicken out before the actual move. Do you mind talking about it? Yeah, I don't have anything to say, honestly. If I was involved in it, I probably would have more feedback for you. I don't know what the price action was looking like. and I'm just actually referencing a 2-minute chart, which is something I don't typically like to do. I just want to see what the downtick looked like. I guess you got pushed out. So it looks like you bought back through 263 here is what you're describing, and then it made this new low that kind of pushed you out. And the first thing that I would say is that for me, I'm probably not taking this at all, even though you basically get near the actual pivot low. I would argue that this thing just pulled back a little bit. I think that Tesla, although it was very relatively strong on the daily charts, and 5-minute chart and every time frame, I just think it's a really tough spot on the daily chart to be initiating a new long. Um, I don't know. I really don't know. I always want to have the signal that the pivot low looks like it's coming in before I buy, but it looks like it did that. The only thing I think is that it was just a really tough spot. So I don't have a tremendous amount of feedback for you on that one, Rex. I'm sorry about it. But if I was in it, I probably could give you some more, but I wasn't. So hope that helps a little bit. Doing my best. So I think we covered everything there on the VTF. Let's see if there's anything here in the YouTube from Club Kumite. I like the name. Two questions. Do you ever trade MOCs at 12:50? I assume you mean 3:50 Eastern. Normally whatever it says at 12:30, 12:45, it will flip the opposite at 12:50. I don't trade MOCs. I know people that do. Almost everyone that I know, but not everyone. Almost everyone I know at this point that still trades MOCs, they do it with robots because it's just too fast otherwise now. The reason why it's too fast otherwise is because everyone's doing it with robots. But I don't personally trade MOCs. I never have. It was really never my game. I'm just a little bit knowledgeable about it because I know a bunch of people that do. Um, what you're saying though about the flip, the MOC flip, is something that I have heard MOC traders complain about. And again, it's not my area of expertise, it's not my trade, but I've heard people say that trading the MOCs has gotten significantly more difficult because they see flips happening at 10 minutes to the close, then 5 minutes to the close. That makes the trade much more difficult. And then I guess this is your second question. Friday with quad witching and rollovers, it did the opposite, and that was crazy. Any idea what happens last Friday that changes that? That's because end of week rollovers. Yeah, I mean quad witching. So the people I know who do MOCs, quad witching and the Russell Shuffle are like the biggest 5 days of the year. And again, we're getting a little bit outside of my area of expertise, but I guess that just is causing there to be significantly larger MOCs. So, they're doing the MOCs every day. They do the MOCs every Friday. But the people that I know that trade it, like the big days of the year where they're trying to make like their entire year maybe like their strategy is on quad witching and on the Russell Shuffle day. So it's really all the feedback that I've got for you on it. I think that it could just be because the numbers are so significant and they're forced to be significant because of the options expiration, that we tend to see much longer individual stock MOCs on those days than we do on others. And maybe that's what causes it to behave, I guess it's a little wrong. So that's the sort of feedback I have for you as someone who knows a little bit about the trade, but has never personally implemented the strategy. So I hope that helps. Um, just back over the VTF to see if there's anything on here. Tate, thanks. You answered my question. That gives me more clarity. Cool. No problem. Okay. All right. Sounds good. Looks like we got to all the questions. It's 5 o'clock. Hope everybody had a great Tuesday after a solid long weekend. And I guess that's it. We'll see how we gap tomorrow. We'll see if today was the pivot low and right back to new highs, the momentum continues, or we'll see if we get a little bit of a deeper paced time correction this time around after having such a big move here over the course of the last month or so. So have a great night, everybody. See you then.